So I'm joined by an illustrious panel of colleagues. Philippe Daoust, Vice President and Managing Director, NA Ventures, National Bank of Canada. Hi, Phil.
Hi.
Ioan Iacob, Founder and CEO of FlowX.AI. Hi, Ioan.
Hi, and thanks for having me.
You're welcome. And Jeri Larsen, Chief Customer Officer, LoanPro. Hey, Jeri.
Hello. I'm excited to be here.
All right, guys. So, in addition to being responsible for comms, public affairs, and ESG, I'm also head of marketing at the National Bank. It's time for you guys to pitch me. Tell me a little bit about who you are, what you're responsible for, and kind of, what's special about your firm. So I'll start with my colleague over here, Phil.
Hi, so Phil, been at National for 8 years, launched the venture arm of National Bank 8 years ago. Corporate ventures, what we aim to do with our corporate venture is really to foster adoption of the company we invest in. So some funds are going to bring money to you. We're going to bring you the partnership of National Bank, and we've been very good at doing so. We've adopted over 85% of our portfolio companies. That's over 35 partnership that we have between our portfolio companies and National Bank. And this is the first time, or one of the few times in the year, where I speak on a panel, and I don't need to explain that National Bank of Canada is not the central bank, so I'm very happy to have a room that actually know who we are. So thank you, everyone.
Thanks, Phil. Ioan, over to you. You passed your pitch test, by the way.
Thanks.
Thanks. Hi, I'm Ioan. I'm one of the founders and the CEO of FlowX. About 10 years ago, working together with the same group of founders and engineers that we're working with today, we had this very simple observation, which was building technology in large organizations is incredibly hard, despite the unbelievable investment that's made. And FlowX.AI, what FlowX.AI is this multi-agent AI platform that enables large banks to build robust, enterprise-grade, mission-critical software at the speed that the best technology startups would be absolutely envious. And very large banks are using FlowX.AI today to really deliver in weeks things that they used to deliver in years. And that's typically two things. They're using it for modernizing their business processes, so taking things like commercial onboarding, commercial lending, retail lending, mortgages, and building those platforms at unbelievable speed, and launching, going to market, and continuing to develop them. But also looking at technology modernization, which means being able to consolidate systems and consolidate technology and reduce their TCO with 90%, and enabling in a completely different way their capability to deliver technology going forward.
So speed, and more speed.
And robustness, a lot of robustness. I think, yeah.
Good.
There's this.
And we'll have the opportunity to talk a bit more about how you cracked the code on that in a minute. Over to you, Jeri.
All right. LoanPro is a highly configurable architecture that provides a lending and credit platform that you can either integrate seamlessly into what you've already got, or it can serve as your lending core. And so for everyone in the audience, they've either got a tech stack that they love, that they just want to plug something into, or they have a tech stack that they hate, that they need to plug something into. And we can help with all of those things.
Very good. Well, all three of you did a fabulous job with your pitching. When we think about fintechs and banks, it's not the most natural marriage initially. How do you guys find success in that, and how do you make the relationship work, given the difference in the forces that are at play? So, maybe I'll start with you, Jeri. Like, what do you feel is the secret to this marriage, and how do you feel it translates into mindset, not just into technology, because we're talking about technology here, but there's a whole other conversation that needs to be had about values, attitude, mindset, culture.
Yeah, absolutely. Well, I get to see both sides of the table as the Chief Customer Officer. I am lucky to be able to sit in that seat. I have come myself from a software background and have been there for years and years, but I started actually in defense acquisitions. So talk about bureaucracy. That was my first decade. So I absolutely kind of understand the amount of legacy systems, the amount of challenges that both sides of the table encounter. For LoanPro, what we are able to see is truly, and this sounds so cliche, but it's accurate. What's in it for me? What is it that I care about? How is it that I'm going to navigate this next year throughout whatever those challenges may be? So for fintechs, we see that it's how do I stay as innovative as possible? How do I make sure that I'm as extensible as possible? How do I make sure that I am compliant, that I'm secure, that I'm watching my data, that I'm taking care of data privacy issues, that I'm making sure that I'm even providing data literacy for my customers. At the same time, on the FI side, right, how do I navigate what I need to for compliance, for regulation, for everything that's happening, even personalization? Right now, every single thing that each of us do is personalized. So how do banks approach a personalized, any sort of personalization that they need to for their customers while still being as fast and as cloned and as parity as they could possibly be on their tech stack right now? And so across the board, it's just making sure that as we sit down at the table with whomever we're meeting with, that we understand what matters to them in that moment, and then we can address it either way. The benefit of being, API first, but yet completely regulatory focused, is that we can do both, right? But I mean, even with like PCI 4.0, how do you possibly attack that as fast as you have to? How do you get to some of those things as fast as you have to while still completely and utterly being careful with every piece of data that you touch?
Okay, you've touched on some important elements around the importance of the human connection and really understanding sort of 101 customer needs. Although we're working towards technology that's trying to speed up the actual go-to-market process. So that's something that hasn't been yet replaced by machines. Ioan, what do you think?
Well, to use a VC term, to double click on that.
You want to circle back on that later?
We'll do as many cliches as we can. It can be our cliche bingo.
Yeah, so, but honestly, for us, that empathy is actually one of the crucial driving forces behind the company. Because again, we've had the different company before this that we exited successfully. And for almost a decade, we have been people in IT in the enterprise, right? We're doing digital transformation projects, and we understand the pain and the complexity that IT people in the enterprise have to deal with. And quite honestly, the world relies on enterprise software. I mean, let's be honest, if Facebook or Instagram would shut down tomorrow, nobody cares. Like, I mean, yeah, a couple of people care, but it wouldn't be too bad. But
my kids would care.
I was going to say, my teenagers would care.
But think about the alternative. Like, let's imagine financial services shutting down tomorrow. Like, we descend into chaos that is cannibalism level chaos, right? It's not. So there are these people that are just, crafting and supporting civilization with what they're doing. Like, literally that's what they're doing. But then they're being blamed for not being fast enough, for not being agile enough, while, by the way, they have to deal with technology from all the way back in the 60s to, I don't know, the GPU farms of 2024. So these people, they have an incredibly hard life. And, that's one of the things that motivates us. And yes, it is complicated, and you have to take into consideration many aspects, and you have to look at organizations as a whole and everything Debby said, right? But I think what's really driving us and what's really driving that empathy is this idea that, yeah, we want to help these people. We want to give them a platform, finally, that can deliver on what they need.
So Phil, you're with me. We both work for a bank. So we have what Ioan calls a hard life. we're part of that group. How do you describe sort of the mindset from the side of the larger organization that's required to make this marriage work?
So a lot of time when we introduce fintechs to business line inside the bank, the two companies don't speak the same language right from the onstart. And that difference in language brings a ton of difficulty for people to understand each other. First of all, the fintechs, the time they're spending trying to sell to a bank, it's very important. On the other side, for the banks, the time they're spending with fintechs is just, we've got 26,000 employees. So it's not that important. So the differential is there from the onstart of the relationship, at what speed both organizations wants to go. And that really creates a difference in view that is going to be difficult to navigate throughout the relationship. The second point that fintechs need to understand is that you need to talk the lingo of financial organization. Often we see CEOs that are more tech savvy, et cetera, they come in and they don't speak the language of the financial institution. That's going to make it also very hard. You come in, your cybersecurity is not going to be on par with the one of the bank. It's going to bring hurdle down the line. Get that information as quickly as possible from your partners. Same thing, if you're dealing with clients' data, it's going to make it a ton harder for your partner on the other side of the table. Finally, I'll tell you if you're successful if you tell me who your champion is inside the organization. And that is really the key to any relationship. If you don't have a true and real champion inside the bank, a financial institution, helping you, you're not going to succeed.
So you just touched on something important, the how, right? How do you make it work? Your strategy is inception. Have somebody within that's really going to champion you from the beginning. Ioan, you know, FlowX is only a few years old. You've been able to convince the very risk-averse European banks, the US and the Canadian banks as well, to work with you. How did you do it? What strategies did you use?
Can I say?
And don't tell me you planted a chip in their brain, because that's not going to work.
Yeah, no, I think there's two uncomfortable truths that kind of come together in that. One is that nobody loves the incumbent technology vendors, right? They've been promising things for 30 years. They've been selling on these promises to enterprise IT people how they're going to make their lives better and how technology development is going to be easy, and it hasn't been. It hasn't become. Actually, if anything, they just added layer after layer after layer of complexity, right? So, from that point of view, in a sense, it was easy because we're coming in there to replace something that's really not loved. Right, like it's more of a necessary evil in a sense. The other side of the question, the other uncomfortable truth here is that banks actually don't move and don't change unless there's something traumatic that's going on. Unless there's a trauma, unless there's a fire, banks will not move. And again, kind of understand that actually, right? Because you want banks to be conservative. You want banks to not take in any new technology. They're keeping our money, and again, sustaining civilization here. So, but fortunately for us, there's actually a lot of trauma going on in the financial services space. There's a ton of regulatory changes, and regulatory means technology implementation. Every single regulatory change means massive technology implementations, and delivering on that has become fairly unsustainable right now even for large banks with massive budgets. It's no longer a question of money, it's a question of can you actually deliver that. Then user, like everybody talks about this actually, that user experience expectations have changed dramatically and are changing at a pretty interesting rate. So being able to deliver technology to keep up with that customer expectations is super important. But the third thing that's interesting is technology costs have just become spiraling out of control. And in the last 3 years, I started hearing CEOs of fairly large banks that are, 100 million, 200 billion, 200 billion assets under management, saying things like, when you ask them what keeps you up at night, it's technology costs spiraling out of control. And they're like, yeah, you know what, we doubled over the last couple of years, we doubled our IT budget, but guess what, there's nothing new really coming out of that. It's just maintenance work, it's just keeping the trains running. Right, so something's got to give in that story, and I think we kind of landed in this perfect storm in a sense with FlowX, right? Because we have a technology that really responds to these challenges that they have.
Jeri, you lend to over 600 lenders, which some of those are banks. What have you learned about how you position that offer, and how do you feel about your position within the storm?
So the biggest piece to position is everyone would like to do more products than they currently have. Mm-hmm. And there's always a build versus buy discussion. Do we try and maintain that ourselves? Do we not try and maintain that ourselves? Do we use a system we currently don't love? Do we build our own? What do we do? And there is so much compliance, security, and regulation that has to happen on every single build that, to Ioan's point, most people don't want to do it themselves, right? They just know that they have to go fast. They have to be able to extend their product line, but how do they do it? And so we are able to provide that modular piece that folks need to be able to say, we would love to be able to, let's start with just installment loans, but then we are going to get to LOC, and then we're going to get to card, and then we're going to get to, and we just continue to build on that. And so that's our number one discussion is, we can essentially start you with whatever you'd like, and then we can grow with you to wherever you're going. And the ability to work around whatever their regulations may be, whether they're Canadian, whether they are US and federal, whether they are from a province, from a state, whatever those may be, we can always make sure that we have the reporting, the analytics, and the security on the other end to be able to, spit out those documented things. Then the second thing is that we're able to say we truly are API first, and we can push and pull to whatever tech stack folks have. That in and of itself usually gets us in the door because of the fact that people don't want to rip out everything, right? They just want to plug in one little small piece. Or they are, if it's a fintech, they're starting from scratch often, and they have tried one. They don't love it. They're willing to rip something out and put in a new one. And so we are, like, our first phase of our customer journey is transition. They're coming from whatever it's been that they didn't love, and then they start figuring out how to automate after that. And they're like, wait, you mean that what has been taking me 3 hours as a lease, I could actually do in 15 minutes? What? Right? And then from there, it's okay, now let's optimize, right? Now I can start talking about what my next offerings are in my stack. And that's a really fun place to be when people start getting innovative instead of getting stuck by their technology. It's really fun.
And maybe I'll skip ahead because you mentioned regulatory challenges, Jeri, on a few occasions as being sort of core to how you're building the offer. I'll turn to you, Phil. You've supported with the team over 30 startups. Ioan and Jeri have talked about some of the roadblocks or the uncomfortable truths, as you put it. What, in your opinion, are the roadblocks that startups are facing and that banks are facing? And how can we work together to better address them?
So it really depends in which area you're evolving with. If you talk about technology, what Ioan was talking about, budget just exploding, just remember that, yes, they're exploding, but they can't keep up with the market. The investment that was done in fintechs just before the pandemic was actually higher than all the IT budget from all the banks in the US. So when you take that into consideration, you end up in a system where the fintechs are now getting as much money as the banks to actually develop themselves, and they're not tied up in old system that both of my colleagues here were describing. So you have that element of fastness as well into the fintech, and then you come down to what Jeri was mentioning, what do I do as a bank? Do I keep having my old strategy back from the 2000s, which was I develop everything internally? Or do I accept to partners with fintechs and move at a much faster rate. And then the discussion internally, which it's a difficult mindset to change inside the bank, because the discussion internally doesn't become, what do we build this year? Is what is going to make a differentiator between me and my competitor on which to build, rather than keep building. And I have, one of the best example I have of this is, if you develop a system inside your financial institution, you're going to have the budget to build it, but you are not going to have the budget to maintain it at the highest level possible. So you might actually, because your teams are good in financial institution, you might actually build something that is top of the line. But then you're going to get no budget to improve it. Meanwhile, Jeri will have improved their system. So although you might have been equal or even slightly better than Jeri at the beginning, 2 years down the road, she's going to be massively ahead of you. And what does that mean is that her client is going to be massively ahead of you. And this is why the mindset needs to change to say, how can I build on Jeri's system that's going to give me something else, something better than my competitor have? Otherwise, you're going to be late at the party at some point.
I want to talk about trust for a moment, because it is the only currency that financial institutions deal with. Trust is the only currency. How, with everything that you guys are discussing, do we build on everything that you're saying? Faster, cheaper, more advanced, costs less to maintain. How do you build that trust between the fintech and the bank? And how do you then carry out that trust between the bank and all of its stakeholders, including investors? How do you monetize the trust? I'll start with you, Ioan.
Well, monetizing the trust is definitely what everybody in kind of our space is trying to do, right? To your point, trust is the most important thing that banks have. This is why people trust banks with their wealth, with their money, with their, the most important decisions they make in their lives. And I think this is something that, startups or companies that want to be successful in working with banks have to deeply understand and integrate that. And again, interesting enough, regulatory many times comes and destroys trust because of bad implementations and bad user experience, right? A lot of the trust comes from the user experience. So imagine you now have to deal with a system that for you as a consumer is just mind-boggling. It's like it's asking you the same question 5 times over and over again. It's asking you to submit the same document for 7 times. That is breaking trust. That is like, do these people actually know what they're doing?
Do they understand, right?
Yeah. So, and again, it's not necessarily correct, right, in the technical sense, because the bank might have just been forced by its legacy systems to implement like certain regulations in a certain way that resulted in that completely broken user experience. That still breaks trust with consumers. And I think this is why it's and again, recognizing that it's impossible for banks to take out legacy technology very quickly. It's mainframes are, I believe, at least mainframes are here to stay for a long period. But what a lot of our customers have been doing very successfully has been just building that digital layer on top of their existing legacy systems, and then kind of slowly starting to modernize things in the back end infrastructure. And so for me, for us, trust between banks and consumers is deeply aligned with user experience.
So I have a thought, and some of my colleagues, Mariana is there, she's on our team, she heads up IT for customer experience, and it's something that as head of marketing I spend a lot of time thinking about with Mariana and our colleagues. What appears clear to me is that sometimes fintechs go through the door of IT and the back end to have these conversations. I'll turn it over to questions in a second, but there's something that you said, Jeri, at the very beginning, understand the customer. So perhaps the lesson here and the takeaway is, ventures is a door, IT is a door, but certainly customer experience is a door as well, because the design that's happening with customer experience is starting from the ground up in marketing and CX departments. And it's often the door at which fintechs do not knock. So something to be considered food for thought, because at the end of the day, it's professionals like my colleague Mariana who truly understand what the end user is looking for in terms of experience, and that will then make it easier for all of you to sell it internally and make it a successful pitch. So thank you for all your remarks. 3 great panelists, great discussion that could go on for a long time. I now want to really save some time. We have 19 minutes left for questions from the audience. I know that there's colleagues who are going around with mics, if I'm not mistaken. All right. Questions, remarks, ahas. Because we can keep talking. All right.
Thank you very much. It was a very insightful discussion. I'd love to hear your thoughts to pick up on Phil's point on the urgency that the fintech may be operating with and incumbent big banks. So how do you guys typically recommend on both sides to really find that critical velocity to either get to a quick, yes, this is something that we have enough stakeholders to support, diving deeper resources and evaluating, and alternatively, how quickly can we get the, it's not a great time, no thank you, and save resources on both sides to really kind of focus on driving value. And I know you guys particularly have a lot of experience across different types of financial institutions, so would appreciate some insights from your experience.
I'll start with that one. The first thing we ask is, what problem are you trying to solve? So that we can just say whether or not we can do it, right? And I think there's, I mean, heaven forbid I talk about a little bit, speaking of cliches, challenger sale, right? Teach, tailor, and take control. You have to ask them, what is it that you actually want? And are we going to be the right fit? And if we're not, we have some other recommendations for you. If we always discuss, how big is, first of all, when do you want to go live? Is that even feasible, right? What does your data look like? Is that even feasible, right? And then being able to talk to them specifically about, what does this look like to the maintenance point, right? What does this look like for long term for you? Do you have a team that you would like to have maintain it? Do you want us to maintain it? What does that look like? And just making sure that we have the right fit for them. The last thing we want to do is, pretend to be able to empower somebody who's not going to be able to take the reins at that point. But then also just knowing we have folks on our side who can help them continue to maintain it, and it's automated enough that it doesn't take nearly as many man hours. In fact, for us, one of the things that we're able to do is say we can actually save you headcount because of the fact that it's just, there's so many of the manual processes that you aren't going to have to do manually anymore. And there's automations that we can put in place for that. And so, though that's not something we advertise when we go do frontline training, right? And say, oh, by the way, but it is something to be able to say, this will make your lives easier. You may not be able to, need to hire as many of you next year, but this is going to make your lives easier. And that's actually one of our favorite things when we go do that frontline training and we say, hey, that one process of yours that takes 15 steps that you have to go through manually for 3 days, we can now do in 20 minutes. And they almost weep with gratitude because it is, there's just so much that they can clean up. So we just make sure that it's the right jigsaw puzzle to the right jigsaw puzzle piece, and that we're going to actually solve their problem. And if not, we say, awesome, come back to us in another year and we'll see if it's a better fit at that point.
For us, I think it's been consistently 2 things. Number 1, it's been risk and regulatory, and number 2, it's been cost reduction. And I'll tell you why. It's risk and regulatory in the first place because we're, as a CIO, as a CEO, you might or not get punished if you don't deliver on, efficiency of development, if you don't deliver things faster. Those are kind of things that just happen. This is how software works. This is the industry rate of failure in development. So those things. But risk and regulatory, those things are unbelievably critical. So typically our first use cases in a bank pertain to risk and regulatory area. And solving risk and regulatory problems for banks is just a massive way in. Second, it's cost reduction. I think everybody will admit that instead of building $1 billion business, it's much more interesting saving $100 million. I know it sounds counterintuitive, but there's been psychology and economy books and treatises written about that tendency of people saving costs, putting cost saving before wins or massive gains. So that's pretty much that has been kind of our focus.
Phil, anything to add from you?
I kind of envy my two colleagues here. It seems so simple when they're talking. Reality for me, for example, I'm going to start a thesis. That thesis is going to take, let's say, 3 to 6 months to generate. We're going to study all the company in that field, all the possible outcome for the bank in that field. We're then going to start sharing that thesis with the entirety of the bank. It takes a long time for people to move from point A to point B, to move them into their timing, because that's not what they had in mind. And then once you move them to that timing, you need to introduce them to the right companies, and then I can finally invest. I've worked with both of those companies in my past to varying degree of success. But for me, for point A to finish, to sign the contract with one of my companies and to do the investment, is a journey between 2 to 3 years. So don't think when we say, how can we make it fast and so on, it's not fast. And I'm not throwing money at every company I'm meeting. I'm probably meeting 1,000 companies for every investment I do. And that's the right company for my organization to work with. Because I don't only look for the best organization, the one that's going to make the most money, I'm also looking for that cultural fit inside National Bank. The way they've built what they have with the system I have, how do they fit together? And that's extremely important. So sometimes I do an investment and I look at my CEO in the eyes and I say, this might not be the best company in the field, but it is the best company for us. So again, looks very simple. I know, because I've worked with both of them, it's a hell of a work behind.
I mean, at the end of the day, it still takes years, but at least, you have some guarantee of the result.
Any other questions? Comments? So maybe some closing thoughts. Some closing thoughts on, if you had to really sum it up, what makes this a good, we'll start with the initial analogy, marriage. Why do people need to pay attention to what's happening in this space? And maybe I'll start with you, Phil. You just talked about fit, not necessarily expertise, but cultural fit being one of the lenses through which you make the decision. What else?
Well, maybe I'll expand on that a bit. We've got some time. When I was asked to create the fund by Louis back in the days, my background was not in investment. My background was in post-merger integration. And that's really the lens I took to the fund I created, which was, how do I take two companies and make them work together? If you look into it as a supplier-vendor relationship, that's not going to work. You need to really go, I like your term of marriage, that's what you're really getting into. So if you believe in that, you'll bring the right companies inside the organization. And then the second point I would bring is, you need to have a lot of grit going into the business of fintech to banks relationship. You're going to have setback. You're not going to meet the right person right away. It's a big organization. Again, we're 26,000 people. You are going to meet more than one group. You are going to meet more than one person before we actually find the right spot. And as Jeri was mentioning, once you found the right spot, you are going to burgeon in that organization. That's the lending pad is extremely important, and you need to work on lending first, and then you're going to grow. Don't try to do everything at the same time. Sometimes I have company coming in and they'll say, well, I could lend here, but I could also lend in A, B, C, D, and E. And we're going to try all of them at the same time. Well, guess what? You're going to fail massively. Okay, none of them are going to work because at some point the organization talk to each other and they'll say, hey, they keep bugging me and they're bugging the entire organization. They're going to shut down on you. Land first and then expand.
Good advice. Ioan.
Well, I think there's a lot of talk, and it came up also on this panel a couple of times about the speed that banks have and financial institutions in general have in adopting technology. And again, I want to double down on that, which is I believe that's actually what we want from a financial institution. We want them to be rather slow in adopting technology. We want them to be rather slow in deciding to work with a new company and being really cautious and really careful about the companies that they engage with and kind of turning things on all sides and before making a decision. Because ultimately they're and yes, that can be frustrating for startups. That can be the only thing startups have is speed, right? They don't have the money. They don't despite getting large investments, they're still far behind them. They don't have the volume, they don't have the branding. So the only thing startups have is speed, which is why it can be very frustrating to adjust, and understand and really understand the banking world. But for us, it's just very rewarding, right? And a lot of people, again, believe it's boring to work for financial services. It's boring to work in the financial services world, and everybody likes going towards consumer grade stuff. And again, I just want to propose to all those people that basically the entire world we're living in today just runs on enterprise software and enterprise technology, which, by the way, after 50, 60 years of kind of haphazard development, is starting to look, it's not starting. It's gone way beyond looking like a horrible Frankensteinian monster, right? With, again, like all sorts of technologies and data all over the place and all sorts of systems and just a complete mess. And, for us, cleaning that up and providing a robust layer for the enterprise world and for financial services, that's just very, very fulfilling. Yeah, again, I think as long as what you're doing and you get the meaningfulness of what you're doing, you're going to be able to deliver things in the financial services world, and it's worth it, is my point.
So you should consider marketing, because you made financial services sound really sexy. You talked about Frankenstein, and you talked about being patient, which are all good lessons. Jeri?
I just want to echo everything that my co-panelists have said. I actually really love my job, but it's not necessarily just my team or just our product, but it actually is because every time that I talk to one of our customers, they're just so good. They're trying so hard. All of us are in this industry because of the fact that we are trying to, make the world financially strong. And we're trying to help the underbanked, or we're trying to help folks, get their kids into school, or we're trying to make sure that those who don't have great credit are able to navigate the system. Whatever it may be, our customers have such unique approaches to be able to serve the world. And whether you're on the FI side or the fintech side, all of us are here for that, because all of us see that this can do so much good, right? Like, Ioan was not wrong when he said this, what we are doing holds up the infrastructure for so much of the world.
And so that we don't turn into cannibals.
Yeah,
and
right?
chaos,
That's Frankenstein and cannibals. This is fantastic. We need him on every panel. But truly, that is, all of us are here for that reason. And I think if any of us have good conversations with each other, we find out that we all just kind of here are trying to do really good things for people in this world. And so I think that again, it may sound way too altruistic or whatever else, but in the end, every single one of us has chosen this industry because of the fact that we feel like we can make an impact and make a difference. And so if we see that across the table from each other and just think, how are we all going to try and do really good things together, then a lot of the contention, a lot of the, can't put those people in the same room or whatever, just goes away because we're all just trying to do the best we can. And so that, again, that may sound trite, but I do honestly believe that if all of us kind of break it down to why are we in this industry, it truly is because we want to make sure that we're leaving an impact and that our footprint is a big one.
Yeah, so we all share in the same objective, creating an impact. So thanks to all three of you. It was an honor to be able to moderate and spend some time with such a cool group of people. I'm so happy to see some colleagues from the bank in the room as well. So that's a wrap, everybody. Thank you.